Okay, now the recording's going. So officially welcome to the Market Watch Group Weekly Market Wrap. I'm Scott. I'm here with Sandy and Steve. We're the rest of you. You should be here with us. And if it's my fault, I apologize. I know I had to change the time. It was late, last minute, unexpected. Although I'm really trying to get us all tuned into Market Watch Group announcements. It's an announcement. Boom. Does it alert you? Did you guys see the announcement? Yes, it pops up. Good time to enable Mike. Steven, you know I can't set a precedent. Oh. I'm Scott, for those of you watching the recording. He's watching so bad. Maybe. Maybe. Um, Here's the disclaimers. Here's the agenda. What happened today? What's happening today? We got a lot of time left. That's the thing. We do have to think about this. And those of you watching the video, if you're watching it at the last hour, it's going to be interesting because right now we're coming into the market's showing a little bit of strength right now. But does it hold or does it give it back towards the end of the day? Right? We know that a lot can happen in that last hour. We're going to take a look at our posture to see if there's anything that's going to shift from this week. I don't think so, and I feel like I not I feel like what I am seeing indicates to me that we are in the starting of our consolidation, our next dip. Even with today recovering a little bit, that's still after yesterday. It's still like, okay, if you look at our stochastics, this is the dip. This is the dip that creates the setups, that opens the window for bullish trading. And I gotta tell you, I'm feeling like our posture where I'm like, I'm losing my skepticism. I'm just like, is the market setting us up to like yank the rug from out from underneath us? I don't know, but where I was like, I'm probably going to keep my risk levels a little lower. I'm now thinking, I don't think I will actually. I think I'm going to go ahead and get a little bit more trades on than I initially thought. We'll see. We'll see. We'll see. We'll see. We'll see. So Steven says, I'll believe it'll hold. There you go, right? So mindset for trades being carried. Expire today. Okay. All right. Um, what to look for next week? Let's look through our trades to see where we think that the signals are going to come first. If there's a specific sector that we're identifying as coming into setups maybe earlier than others, or maybe there's a few. I think there are a few, if you want my opinion. Um, yeah, let's keep going here. Let's see where we end up. Okay, let me get a chart. Let me get a. So my charts, I don't know what's going on. I need to restart my computer. Okay, that here we are. Netflix, Costco. Yeah, we'll see these guys. We've had a nice little rebound. That's three in a row. We're at a five. We're, we're back in a bit of a stronger territory here, right? What's going to change? Let's walk through it. Tech shot up, Russell fell, so those are kind of mixed signals, right? We want this. We want the Russell to hold up to sustain our bullishness to some extent. So let's go look at charts here. We'll go back and forth. 3-year weekly. I think we're in the right place. We're at a higher high. It's not much of a higher high, right? It's not much of a higher high, but it's a higher high. It's the newest high. Higher low, higher high. Long term trend still intact. That ended up being just a dip. It wasn't a full-fledged correction, just a dip for now. And where we said last time it fell short, this time it didn't. It made a new high. So it's like, well, okay. You'll notice though, back here, we got a little higher and then it started to stall and then it fell. I'm still going to be keeping an eye on things from this perspective. But scoring for now, not going to change. What's happened from here to here? Now, we did touch a higher high here, but I'm not going to score that. Tell me if you are. I'm not. 1.5 looks good to me. Whoops. Yeah, this looks like a 1.5 that we're in right now, and it looks like we're maybe going to pull back a little bit. I'm perfectly okay with that. 1.5, yeah. There's nothing happened that would cause us to raise that score, right? If you map this trend, I think that basically is perfectly at a 1.5 right there. Okay. That's too thick. I like it a little thinner than that. Yeah, that's better. Okay, what's next? Volume. Ooh, volume. Yesterday's volume was above 5%, which is my threshold. Now, this is one place, for those of you listening and for those of you in attendance, this is one place where you might think about a differentiation. But this is what's interesting. There's two right here. Those are two negative days. This one is barely negative, right? And these are getting to the point where they're stale. I'm going to not really... discretion says I'm going to discount those. Then I have nothing until right here. And I had a selling day. So I'm going to say I have one selling day. And I have no buying days. I'm going to say that's a tie. Right? That's a tie. Barely. Well, I mean, if it was a tie. If it was like 0 selling and 0 buying, I would actually give that a quarter of a point. I'd be like, you know what? That's enough. For now, I'm going to leave it at, I believe I'm a 0. Yes, I'm going to leave mine at a 0. Anybody disagree? Now, people might say, Scott, you should be positive because your litmus test is that you started over here to the left and you're over here higher to the right. No, that's not what I'm saying. I'm saying that what we see here supports a positive score if you had one. If you're like, hey, I've got a positive score, I'd be like, oh, I don't see it personally, but it supports it because it is higher. That would pass the litmus test. If you had a minus 0.5, I'd be like, ooh, that's not going to pass the test, right? Like, yeah, if you still are giving it a remnant of a minus quarter point. But for me, a 0 means that it's going up, but that the volume analysis is neither contributing nor detracting from that analysis. So I'm a 0, and I think that makes sense. That's my thought. Let me know what you guys think. Are you with me, Stephen? Look how fast and easy we can communicate. Okay. If we get through everything, I'll open it up. I got to get through everything first. Then at the end, we can open it up. Then, only then. Okay, what are we looking at next? Let me get rid of a couple of things. Go here to this, pull this up, refresh, and what about those glasses? Biden is sending a message. I haven't bought new sunglasses in 2 decades. Boom, markets are up 0.7, 0.2, 1.1, 0.9. Crude was down but turned back up. Little concerning. Nvidia split. We've been talking about the split. That's two big ones. An increase in split action, right, can be very interesting. Five charts showing Nvidia's jaw-dropping rise to stardom. Very nice. Very nice rise. We've loved Nvidia the whole way. U.S. economic hits two-year high. Economic output hitting a two-year high, though. Rates dip below 7. That's trying to price in. We're going to look at the Fed today. 401k millionaires surged 43% in the last year. Here's how long it took them to reach 1 million. Okay. Interesting. Billionaire David Tepper sold Amazon, Alphabet, Microsoft, Meta, and Nvidia in Q1. Well, that seems like a bad idea. We have gas station having a gas roar. Oh, 267. That's amazing. That's super, super helpful. What else? Dow rises ahead of inflation. So let's talk about that. We know what's going on now. What's in the news? So the big thing in the news this week. Where am I? Let's get back there. Am I not? Oh, sorry. I mean for next week. This week, I'm like, wait, no, it is Friday. Consumer sentiment. I mean, everything's coming in as expected. Next week, nothing on Monday. Oh, it's a holiday. Sandy, it's a holiday here. So bear with me, you guys, so that I can make sure Sandy's calendar reflects it. I am going to adjust the weekly market open. Is not going to be on Monday because there's no market. So let's make that on Tuesday at the same time. And yes, good to go. But I will remind, are we meeting Monday? Negative. No meeting Monday because there's no market Monday. We'll meet Sunday. We'll take Monday off. Do you have a Memorial Day, Sandy, like ours? Just a different day? I don't really like. Both my parents were cremated. So we just barbecue. It's just a holiday, like a day of remembrance. You drive and people go put flowers on gravestones. That's what some people do. I choose to barbecue something, and maybe have a drink. Memorial Day. I don't know. Maybe there's even more significance than that. Maybe we just don't even learn about all of it. I just know we get Mondays off. Oh, is it a military originally? Okay, I did not realize that, Stephen. I did not realize that. Okay, represents the loss of military in wars, and then people have sort of just adopted it to because I know a lot of people just are like visit their family gravestones and stuff, right? Like nowadays, it's sort of morphed into a generic day of remembrance and honor, I guess. Yeah? Okay. But there's no market and banks are closed. Anzac Day. All right, there you go. Yeah, so no market. So we won't meet. We'll meet on Tuesday. And then after Monday's closed, we have consumer confidence number coming out on Tuesday. We're expecting it to be under 100. Beige book on Wednesday. We know that we're like Fed news crack addicts right now, right? We're like, give me some Fed, give me some news, Fed. I gotta have my fix. Thursday, first revision of GDP. And then Friday comes the hammer. Income, spending, and the Fed's favorite inflationary measure, PCE. Okay. Um, so that's what's coming up. Speaking of our Fed crack addiction, let's go feed it. Let's go feed it with look at current expo. So I'm like obsessive right now. I've literally lifted my coffee cup like 9 times, and it's empty. Oh goodness. What do we have here? No expectation at all in June, obviously. And then you think, oh, maybe July. I mean, it's 10 to 1 against in July. And then we're like, well, September, we've always got September. That's where the probability remains in our favor. Nope, it's shifted. Now it's in favor of no cut. And I think Friday is going to determine where this goes next. If we get any kind of negative reading on our PCE, there's just no way there's time for it to do what they need it to do. You're also, so you're seeing a couple of things here. You're also seeing an increased number of sub feds, regionals, and vice chairs, right? You haven't seen Sir Austin Goolsbee do it. He remains cool under pressure, known for maintaining his presence in situations that are stressful. That's why one day he will be the Fed. They should have raised the rate once more. Well, here's the thing, though, right? I mean, I don't know. It's you're talking about like the largest economic vehicle in civilization, the U.S. economy, just an enormous behemoth of a thing. Empirically, they were late to start raising rates. They did a good job smacking it hard, and I think they actually were good because that we've it was coming down, coming down. I just think I'm moving more into the camp that we won't see any cuts this year. I don't think they need to hit it. I think they can allow it to sit because that's the thing. Um, I believe it's on average 18 months for rate activity to impact the economy. Oh, you think way, way back when they first stopped, they should have hit it one more time and then stopped. Yeah, maybe. I mean, I don't know. Time will tell. It's hard to say right now. I don't think they'll need to hit it again. I think just the fact that we'll start to see a little bit more impact. When was the I'm gonna go to my phone and ask ChatGPT a question. Um, when did the Fed raise by 0.75 two times in a row? Let me see. June, July of 2022. Oh, I mean, look at that, right? We're almost at 2 years. So if on average it's 18 months, it's like the effects of those two big ones, right? We're just barely starting to feel it. They hit it, and then a little more, then a little more, then a little more, right? I don't know. I think we're gonna be okay. I just don't think they're gonna lower it yet. And in fact, I think that the negative impact of those early rates starting to show up are going to motivate them to cut it despite inflation not yet coming down because they know it will come down as that negativity hits. And they need to be in front of that. If they wait to react, that this is what they have to anticipate. If they wait and be like, "Oh, we're going to wait for the data to show up," it's too late. Like this thing is too big. If you stall it, it's so much harder to get it moving again, right? And so um, afraid we'll get used to the current rate. I mean, again, with us only, you know, less than 2 years out from the two big ones, I just don't think that we've had enough time to assess that we've seen their impact yet. And I think that's the Fed's stance too. I think there are a couple of people that are in your camp, though, that are like, I would hit it again. But a couple, and you might think, well, how many Feds are there? There's like 193. No, I'm just kidding. But they're all over. There's like this regionals, and then there's vice chairman and sub chairman, and so there are 20 or 30 that you'll see with at least a dozen. Of, so if you have one or two who are like, I might raise it, that's not something that I would think. Yeah, we may see the rate go up. All right, good discussion today about that. Energy drives, well, actually it was energy and rents. And so right now that's part of the problem is that the rates being high is keeping rents high. If the rates come down and more people can afford, then all of a sudden you have some movement and traction again in the real estate, and rents can come down a little bit because it was rent and energy as the two primary drivers this very last time, right? Um, let's go look at the VIX. That's looking like a lower high setting up, right? That looks like this thing wants to make a run down to 10. This is looking quite bullish here. It's not though. It's not a lower high yet. It's still moving up. This thing's not even halfway down. We know that this could very easily on Monday look like I can't draw right now for some reason. Yeah, my computer needs a reset. Anyway, it could move up a little higher still and still be a lower high, but it still could come a little more. We need to be patient as we look at it coming into next week, especially with a long weekend. Um, right? Let's hit the watch list. But you're right. Oil is a big one. Oil is a big one. I can't even use this right now, so I'm just going to turn it off. And let's get my watch list going here. And Apple. Apple is setting up. I'm getting ready for it. ACB setting up. Getting ready for it. AIG. I mean, look at it, you guys. It's looking strong. Look at all these things that are pulling back, looking at higher lows. The sellers, look at the volume dropping off. Look at that day. There's hardly a blink. This thing averages 4 million and we're at 750,000. Well, I guess we're only halfway through. I keep forgetting that we're not at the end of the hour yet, but still. A lot of things that I think already we've seen: technology, financials, technology, consumer discretionary, Amazon holding up. AXP looks good. Financials, Boeing. I mean, you could make the argument that it's setting up and starting to show some signs of reversal. I'm not a fan of the company. Bank of America. Financials are strong, but financials look like they're in a little bit of a consolidation here. Citigroup consolidating. A lot of things. Caterpillar. Chipotle looks like, I mean, yeah, it's really kind of sideways now, and we're real close Next week, we'll start to see that split coming. CNM, bullish, but you have earnings, so be careful. COP, oil, dropping. We love that. Costco, down, looking strong, right? Looking strong. Um, let's see. CRBG setting up. DAL setting up. Are you guys feeling like you're going to be a little more bullish if we start to get these things giving signals? Give me your thoughts. Look at this. It's very close. Yes, Sandy said. Me too. The DIA setting up. FCX. Lot of bullish momentum coming in again. GE second trade. We talked about that. If you remember, we talked about that. I said I got stopped out of the first one. It fell apart. But if it doesn't break the low, which it didn't, then there's a new trade. Boom, right there. Ready to go again. Ding. GE, we bring good things to life. Gold setting up. Google setting up. IWM back above the 50, setting up. KB Homes. I mean, look at it. It's everywhere. There's money in communication services. Meta bouncing off a higher low. In technology, look at the strength in Microsoft. In retail, in consumer discretionary, in financials, in industrials. Woo, the breadth is spreading fast. Right? Netflix, Nvidia. A lot of breadth in this market. A lot of breadth in this market. RTX. SPY. Man, I got to tell you guys, I'm feeling more bullish. I feel like there's a good chance our posture does increase again. I think that the sector rotation is going to gain some strength. Maybe not a lot, but at least maybe across the board, half a point. Fourth week in a row, 5.5. That's pretty good, right? VIX is looking like it's ready to go soon. BRT, strong, very strong trend, but not a trade on this one. This looks like it's setting up for a higher low. Sideways on waste management. WMT. Yeah. Okay. You don't think so? Okay. All right. I love it. I love it. You think we're going to stay? You think we're going to drop, or you think we're going to stay? And it's funny, Stephen, because I do think that in this case I'm going off of a feeling. I'm like, I feel like this is going to be stronger based on just like how things have been moving this week. But you're 100% right. Like that's not me like, here's my evidence that I'm going to point to specifically. That's my generic feeling. So I like that you called that out and challenged that. What are your thoughts, Sandy? Posture good. So let's between the three of us here, let's predict it. So Stephen, you're maintaining your skepticism. You're saying, You feel like there could be just a little bit of a bear trap set. Yeah? A little bit of a bear trap set. 4.25 holding. Okay. I mean, and I've been skeptical the whole time, but I said a couple of litmus tests of my own, right? I said if we take out this old high, and if you notice right here, it was underneath it, and if it would have turned from there, I was like, oh yeah. But then we popped and we got all the way up, and it's like, hey, we got to this not even by a little, by kind of a lot. We busted up above it, not with volume. So there's that creates a level of concern, but it's a higher high. So I'm like, yeah, I don't know. If you're skeptical, I can understand it. If you're a little more confident, I can understand it. The market is moving without strong buyers. Well, because we still have trend. If we have trend, we don't need volume, remember. Volume is what I need to break things out, to reverse things. If I have a trend, the laws of physics apply here in trading. Things in motion tend to stay in motion unless acted on by an outside force. So the outside force right now would be volume to the downside, which we did see, and we thought this might turn. But now that we've resumed, we have to make the assumption that we don't really need volume for this thing to move. As long as there's a lack of sellers, we don't need that many buyers. And that's where we find ourselves right now. All these sellers back here, they couldn't find their strength again over here. And we'll see what they can bring to the table now. We're like, great, show us. Show me what you got, sellers. I'm ready for it. Yeah? And if they don't do much, that means we just had a higher high followed by a higher low. With a 5+ market posture score. What does that tell me to do? It tells me to be bullish, young man. Be bullish. There you go, right? Stephen, you didn't panic. And it recovered. 65%. Now what? Well, a lot of times when I'm looking at should I exit a trade, one thing I think is if I wasn't in the trade, what would I think? And if I wasn't in the trade and I'm like, boy, that looks like a good bullish setup, then I think, well, then should I panic and sell it, or should I see what I can do to ride this out and make sure I don't miss if it has one of those abrupt smash higher, we missed the entry. How many times does that happen where we're looking for an entry and all of a sudden it smashes higher? And it's just like, bam, it's gone. Well, if you're already in it, that's the only way to catch that. And so, right? So don't close it in that situation. So yeah, I think you've done well with that. TSM higher. UUP. I'm a little concerned here still. It's still holding above the 50. Remember that if this thing bounces and takes out this consolidation, that's going to put additional downward pressure on the market. If the dollar increases in strength, that is going to put additional downward pressure on the stock market. That's one of the catalysts that helped in the completion of a correction last time in September and October was the strength of the dollar that ultimately then fell apart. Here's the VIX, looking still quite bullish, as it were. Bullish on VRT, but without a signal. Bullish on WFC with a signal developing. Kind of neutral here. I like Caterpillar or other industrials better. Maybe on Sunday we'll do a search of industrials because I feel like the group is getting some strength, but we don't have a lot there. Walmart, just looking for a pullback. Basic materials. Yeah, we don't love that that's moving. Communication services, looking strong. Energy, looking not very strong. So, right, Stephen, if the anticipation of rates can ease mortgages and that gives us a little bit of an ease on rents and oil prices come down, that alone can ease it. But I also think we're still about to see a little bit more where we see the impacts of those initial rate cuts starting to impact us a little bit more. Oil is expected to surge. Oh, okay. Based on what? What's the if it's expected to, why hasn't it? Like, what's the event they're waiting for as the catalyst? Do you know? Just what you're hearing in the news. Yeah, I'm skeptical, right? I mean, if something's supposed to be going higher, it should go higher. What's it waiting for? If it's waiting for something, what is it waiting for? So we know that it's not like it's just supposed to, but it's supposed to if this happens, then, right? If OPEC releases a statement in June that they're cutting production and that's the catalyst, then yeah, you're right. That's going to have an impact, right? XLF looks bullish, holding support. XLI looks bullish, holding support. Technology barely starting to pull back, but does look bullish. That's why I'm saying I think there is going to be, even though utilities still has some strength, I think we're going to start to feel and see the growth segments coming back in. Staples still looks pretty good, but not like outstandingly good. Here's utilities. It's pulled back a decent amount. We'll see if it starts to find a different level of trend. Here's healthcare. If you like healthcare, still good. Did we just release another batch of oil? That I don't know. I don't track oil much. To help bring our gas prices down, while at the same time, did we do that? I haven't heard about anything about keeping prices down or relieving. I know they released something from reserves, but that was like last year. I don't think that was any time in the last little bit. I think that was back when there was like, the heavier inflation. We can see, you can see it's not necessarily, let's take a quick peek here. CL. So 87 is here. We're down here at 77 now. And if you go back and just look at, like, let's get a 3-year chart. So, back here when inflation was really, remember that we said it was June and July. So June is when the Fed hit us with a 0.75. July, they hit us with another 0.75. And you can see that whether that was just a coincidence, it had a pretty immediate impact. We were up at 120. So 80 is really not bad relative to 120, right? Now, this is where I think there was some oil released, and then they bought it back at 80. I mean, think about that. If they did that at 120 and bought it back at 80, well, that's phenomenal, right? That's good policy right there. To release it at 120 and replenish it at 80, 50% cheaper, phenomenal. And 1 million barrels a day is really small relative to consumption if you look at what the U.S. consumption on a daily basis is. Now, where are we relative? So you can see the lowest price we've had is really only around this $70 mark. It dips temporarily, but that's basically it. So, I mean, we're in an okay place. We don't like to see it get back up towards this, last time in when we had a dip, remember, this is where we had a correction. We got up to 90, 95. We don't want to see that. If this bounces up and gets to that point, you can see we went up, pulled back, and bounced again. Up, pull back. If this bounces again, more trouble. Comes down, doesn't surge, I think we're going to be okay. All right. Yeah. Look, we're at the top of the hour, so uh, we're doing some travel in the summer, right? We do. Yeah, and we want to see the market bullish, Stephen. I agree with you. I agree with you. We don't want to see that at all. But things look okay right now. Oil's coming down right now in the short term. That's going to put a little ease on things. So fantastic. I think we're in a good place. I think we're going to see a little more bullish, maybe, maybe not, but we're definitely seeing a consolidation that's going to lead to some bullish trading signals, unless something crazy happens and then all of a sudden the sellers just like slam things. I'm looking for setups. All right, you guys. Well, anyone listening to the recording, I apologize if you missed the notification. Um, but I hope that you're able to listen to this real time so you can think about. Yeah, it's not like we have signals right now. We're deciding what to do as we look at next week, turning into signals. So there you go. I'll see everybody Sunday, regular time. No trade, no session Monday. Then we'll meet Tuesday. Have a wonderful, wonderful rest of your day. Happy weekend. See you guys soon. And as always, happy trading.